listen to your aunties. Now, I've been doing it lately. Listen to your auntie. Today, we're going to be talking about money, 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 and how we should relate to it, credit and loans and investing. We're going to try to keep this under an hour so our editor can edit. We have today two guests, Kelsey Hatcher and Rachill Arrington. So welcome them to the show. Yay!
Welcome.
Morning, all.
Morning, morning, morning.
I've been so looking
Thank
forward
you
to
all for your time spent on this. So I appreciate it. I sent a brief, what do you want to say, docket of what we want to talk about. We kind of this came together when I was talking about money and credit scores and loans on my daily Rise with the Prophet, which is now daily Rise with Auntie Akara. And my sister chimed in. She said that she got something to say about credit and all this money thing. So, what did you have to say, Ray?
So, in our society, we're taught, and I grew up the same way. So we're taught. My mom taught me the same thing: good credit, good credit, good credit. Now, the reason I chimed in to your video or your earlier video is you were talking about how credit can be good in some instances and this and that, and I'm like, no. I don't believe in a credit score anymore. I don't believe in debt. I don't believe in anything. So I've been on both sides. So I'm not going to sit here and say, that I've been on one side. I've been on both sides. I've been in, my husband and I, we paid off about $58,000 in debt in a little over a year. We grind to get out of debt, and will never go back. So when we talk about a credit score, don't care about it. Don't believe in it. I feel like you only need a credit score if you plan on borrowing money. I don't plan on borrowing money ever again. So that's why, of course, that's the opposite viewpoint we have in our society. And that's why I said people ain't gonna like what I'm gonna say. You don't need a credit score if you don't want to borrow money. So let's talk about what a credit score consists of, right? The number of accounts you have, the type of accounts, your usage versus your available credit, the length of your credit history, and your payment history. So all your credit score is just an evaluation of how you use and pay your debt. So I can care less about one because I don't plan on borrowing money. So I have no open loans out there now. So my credit score went, guys, from 830 about 5 years ago, went from an 830 to now I'm at a 600 because I have no debt. Where does that make sense, right? So that's why I'm like, I can care less, but I just check now, just, out of curiosity. But I feel like the credit score is a never-ending cycle to keep us as Americans, as human beings, in debt. And that's how I feel. And it's just like I said, I have close friends and family members who don't like it. They're like, that doesn't make sense. Like, why would you buy a car in cash? Or why would you buy this in cash when you can finance it?
But why finance it if you could pay in cash?
That's how I feel.
But
again, it's a mind shift because 5 years ago, I might have said the same thing to you as well. I'm like, well, it's zero down with no interest. But if you got it, why not just pay for it?
Right.
That's how I feel.
Yeah, the only reason why the SUV that I have now, it's old, it's a '04 Pathfinder, but I did finance it simply because I was trying to build up my credit score because I knew my husband and I would eventually need to get a loan to purchase a house. So I was just trying to build up my credit, but otherwise we always pay cash for cars.
I have never paid cash for cars. Not that I never wanted to pay outright for a car. I just like a newer turnkey. I just don't have the time to continue keeping up as a single woman, that is, to continue to get it fixed and make maintenancing more
Mhm.
through the cost. But I really admire those who do buy their cars outright and they have the ability to make sure it's fixed. Like Nathan's car, his truck is paid for outright, but he's also a mechanic. Oh, well, not officially yet, but he's in a mechanic. So he has the access to fix up things that he can fix up on his truck. But I completely agree. If I had the money to buy my car outright, it's like the worst thing to get a loan on because it depreciates the older it gets every minute, every day, every time you drive it. It's like the worst investment to get a loan on. But that's me. What you say, Kelsey?
Um, so everyone has hit on very good points. I totally agree with Rachel saying. I totally can also see different perspectives. So just a little history, and don't want to go on too much, but Rachel has been blessed. We all been blessed. The Hatcher Robinson clan has been blessed enough to where our parents, when both of them passed away, they had life insurance and they also had assets. That is something that some people, if not, I would say this way, some people cannot do. Um, so we were blessed to acquire things that some people have to acquire now, whether it be via house, car, whatever the deal is. So I would say in that particular aspect, we can be somewhat ahead of the game because our parents were somewhat ahead of the game. Because certain things that we don't have to acquire, we don't have to, which allows us not to have to. With that being said, one of the things that most Americans face is because this is a capitalistic society. That's pretty much how it was built. Slaves pretty much built America. That allowed the rich to get richer and the poor to be poor. And then not only that, to make it even worse, set up a system where that continues to feed, which is ironically debt. Same thing that Rachel was mentioning. If you can help your kids or find a way to not get in debt, that is well above the curve that most people are going to be at, because most people are going to be in debt. The reason why, because we're trying to acquire things that we don't have the money for now. Now, with that being said, the best we can do is navigate our situation as much as possible. So if we can avoid it as much as possible. Avoid debt. Like Rachel said, do not get in it. The reason why is because it makes the rich richer. You want to be in that position where I'm getting rich, or I am, getting above the curve. I'm helping my children either get a college. If they want to go to college, you can pay for that. If not, scholarships, any way, shape, fashion, or form. If you get your house paid off sooner than later, get your house paid off sooner than later. But to get out of it as much as possible. And so one of the things that I realize is that it's going to be difficult for some people, depending upon the judgment and the decisions that they make at a very young age, which is what society banks on. When you're in college or when you are in a position where you need debt, here, come get it, come get it. That's why you got the zero interest free. That's why you got all these nice hook and bank, because it's driven on debt. You owe somebody, you're going to pay way more money on that with the interest over the course of time. 5 years, 6 years, 15, 30, you're going to pay that double, if not triple. And then what they're going to do is they're going to take that money and do some of the things that I've learned about throughout my primary career is they're going to put into the market. And then they're going to make it double, triple, quadruple, and then expand to the point to where not only are they owning debt, but now they're expanding to getting other purchases like credit cards or, starting up companies to where they can continue that debt feeding. If not, showboat a little bit and buy them arena, where they're getting marketing, promotion, and very different other stuff. But it feeds the system. And what you don't want to do is be a contributor. It's just that if we make not the best decisions at a very young age, we're inclined to feed into the system. Not only will we be in debt, but we will be horrible debt. And we will be relying on those things that Rachel mentioned before, your credit score. Those are things that will drive you only because we're in that situation, because sometimes we place ourselves in that situation, or two, it may not be, we may not always have control of everything. We're only trying to mitigate the damages as best we can. But the best thing is get knowledge about what the debt is, how to get out of it, how to remain out of it, and how to do what the banks do and triple, if not quadruple, your money.
Now, my question is, so clearly this system is designed to keep really the poor in debt, stay
As
in
much as
debt.
possible.
But there's times where we as individuals may want to get something like a house or start a business. Are there alternatives to going to a bank or getting a bank loan, like community funding? Like I'm gonna take, for instance, one of the content creators that I really enjoy is Kev on Stage. And he didn't take out any loans to start his app or get his, that I know of, get his studios in California where he lives. He really got most of it from his Patreon, those who contributed to him directly, you know, through having a Patreon. They pay to watch his content, or they have sent money as a community because we believe in them. Kind of like the way you give to your church, you know, to keep it up and running and so on and so forth. Is it any type of, is that a possible way? Because I think that the Asian community does that a lot here. Like if they want to start up a business, the family or the Asian community will lend them money or give them money to start their business so that they're not getting a loan from the bank.
Oh, I believe there's many different ways and avenues. I think a big part of it, and just from my perspective, when you look at the community and what you have in your environment, sometimes that is the case, sometimes it's not. But what I also realize is that shouldn't, if you were looking to start a business, that shouldn't stop you. Learn about the business, learn about, you know, what it takes. There's a lot of resources out there that I would say that has become more valuable nowadays than it probably was 20 years ago. A lot of things are definitely searchable. You can find ways to establish a business. Matter of fact, the idea of even having a business, I think the evolution of the value of that has not doubled, if not tripled. 20 years ago, if not 10 years ago, everyone was looking to get a higher education and then go to work. That was it. Owning a business, being a business owner wasn't really on the forefront, but if you looked around, there were more rich people or people who had more than you starting businesses that are now probably bigger today, if not may have failed, but they tried, but they got the benefits of being a business owner. Now, what I realize nowadays, that is really the key in order to reduce your taxes, in order to gain income, find a niche, find a brand, stream of income. All of that helps with being a business owner. Not only that, but I think the biggest part of it, if you're doing something that you love, that's rewarding in itself. Not only that, but if you're in a position where that business becomes your primary income because it's so great. I mean, don't get me wrong, look at Mom. She did really well with home interiors. And I could say that is something to where she built on, but if she could do it longer, she probably would have, but she worked it. It was her. I would encourage anybody to find a business, be a business owner. You don't always have to, and not only that, but have multiple streams of income. Don't just settle on one, have multiple ones. Don't just sit for a particular one business. And if that's your passion, great, focus on that. But I believe to have, if you have options, that makes you and puts you in a better position than when you have limited options. And if you notice, people who have money now had businesses probably 2 years ago, maybe had 4 or 5, 6 different businesses. They may have failed, but they remained in that business owner standpoint. They never went and really worked for a company. And if they did, it was probably either for a short period of time or they were only using it as a platform to continue feeding their day-to-day funds so that they can focus on the business piece of it, which is going to be what's going to make them their most money, their bread and butter. Don't get me wrong. If you take that concept like a drug dealer with a rapper, he's using the drug dealing game in order to pay his day-to-day funds, but his main goal or her main goal is to be that rapper signed to a label or having their own platform where that is their main source of income. And then if you notice, once they become a rapper or that's their main source of income, they branch out, acting, liquor. They branch out and continue to add their multiple streams of income with that. We could do the same thing. I mean, don't get me wrong. I believe Black people are very innovative. There's always a niche that we see, a market that we see. It's just getting out, promoting it, and doing the grind work. But you definitely want to work smarter, not harder. You definitely want to be able to find platforms that will help support it as much as possible. Are we living in that community? I would hope so. If not, then hey, there are public or county or state tax breaks or resources that are available now out there because they want more business owners. They want them. Somehow, some way, shape, fashion, form, they drive the market. They drive the economy. So if you understand too, I think the smaller picture, the bigger picture, how everything kind of plays and works, you could definitely find your niche and do your thug thizzle and honestly, you know, generate streams of income that not only satisfy yourself, whatever you're looking for to accomplish and your goals, financial goals, if anything. Hopefully you have that support within the community. And those are the things that continue to drive your success. You're doing what you love, you're a business owner, and you're getting and reaping all the rewards of that to be able to pay for whatever financial goals you look to achieve, whether it be to pay the house off, get your kids' education, all that stuff. It's out there. It's more of just going out and finding it and seeing it.
Now, I want to add to the fact of having a side business, and when you mentioned mom, and of course, if you all don't know, and I did not announce them as my siblings, but to speak on mom had several side businesses.
And dad, sorry, I didn't mean to cut you off. And dad. But anyway,
she did Mary Kay. She used to make sconces. Before she passed, she was doing poetry and making personalized greeting cards. So, and these are all the things that she loved to do. She was an at-home mom, and she contributed to the household funds with the side gigs or side hustles, side businesses. And when you say to be a business owner, you don't have to be an original business. Like my mom did, home interior and design was a bigger business that she used as another stream of income. And same with Mary Kay. If you find a business that you really believe in, you can do that as well.
So to also to answer your question about the house, a lot of people don't know the easiest way to buy a house is with credit. But another thing that lenders do, but a lot of people don't know they do, is called manual underwriting. So what that is basically, they don't run your credit. They look at like your employment history. They look at your income. They look at all that type of stuff, and they'll give you the loan based on that. So yeah, if you're jumping job to job, you probably won't benefit from that. But if you've been with the same company for 8 years and you're making 120K, and they look at all of that, they look at your history, they will give you a loan without running credit. So that's another way you can do it without having a credit score. So it's other avenues. It's just that it's always just it's easiest. It's easiest to run the credit, and run that spouse, yours and your spouse's credit, and you're approved. They don't want to go through the manual underwriting because it takes longer, and it's a little bit more work for them, but they can do it. You just have to request that it's done.
Okay.
So I have a question, if you don't mind, for Rachill and Kelsey. And this is kind of stepping out into left field, but I just wanted to know, what is your opinion regarding the World Economic Forum and their push to move towards a more global socialist society? And their motto is, "You will own nothing and you will be happy." I mean, how does someone because both of you are in finances, how do you see that? Or do you see America saying, oh, hell no, we're not doing that? Or what is your opinion on that?
Rachel, I'll let you go first.
I don't think it'll ever happen. It would never happen. I would love for it to happen. And I honestly feel like, and I was having this conversation ironically with my husband maybe like a week ago. I feel like people who own and they're not tied in by debt will spend more money. I don't think that anything would happen to the economy, and I think the economy will still flourish. People they're gonna get their money up front. It's no more monthly payments. So I'm going to buy a $2,000 refrigerator. I'm giving you $2,000. I still think the economy will flourish, but the government will never. They will never. It's just too easy. You know what I'm saying? Like, it's too easy to get that person that makes $20K a year to open 3 credit cards and live on 3 credit cards. I mean, they make more money that way because their interest rate is 20% on that credit card. So to me, it's just the mindset of the American government. Mm-hmm. It'll never happen.
So you think maybe the rest of the world may do it, especially in the poorer countries, but you feel like America will never participate in that?
No, I don't think we will. I think it's just our mindset. I don't think the whole rest of the world will, but I think some countries could adopt it and it could work, and it can work well. And we could see it working. We'll be able to look at that country and see it working and still won't adopt it. Just on my mind.
And Kelsey, how do you feel?
I agree with Rachel 100%. As I was listening to her, 2 words came to my mind: inflation and healthcare. Mm-hmm. One of the things that I always, as you can see, as if we all have lived, inflation it's almost like cancer. Soda bottle, can of soda. I remember when we was growing up at Safeway, can of soda was 25 cents.
25 cents. Yep.
Look at it now, $1 some change. Gas, prime example. So there's so many different things that even if that idea, given how capitalistic we are, don't get me wrong, I hate to use this concept, it's almost like racism. It will never go away. It may get diluted a bit, but come on. There may be some people who could get out of debt, and they will show you. The question is your application of it. How disciplined are you? I mean, don't get me wrong. There are people that will do it and there are people that won't. My sister, prime example, Rachill, she is going to remain out of debt wherever fiber of her being. She is contributing to that concept. But there are a lot of people who want the flashy things. They want something they can't afford. You have a lot of young people coming up doing the same thing. They see the flashy stuff, they can't afford it. They're going to repeat the same cycle we probably repeated at a young age of our lives, jumping into debt, doing way more than what we're supposed to be doing. People are going to make mistakes. Don't get me wrong, like lawyers, mechanics, it's a capitalist society. What you don't know will cost you. If you don't know it and you can't do it, then you got to charge me to do it or somebody else in this industry, and I'm going to hit your head up. Why? Because I got 4 kids. Or I got 3 kids, or I got that mortgage, or I got whatever the deal is. So you're going to probably find
up with.
You say what?
Also, or they have that flashy thing that they're trying to keep up the payments on.
Correct. You got 2 or 3 houses, but I think it's kill or be killed. You're going to find a mixed layer of people who are in that situation, people who are really focus on getting up out of debt. There are a lot of people, you're going to have a mixed bag of nuts. And I think majority of the mixed bag of nuts are going to be people trying to get out because they are in it heavily, or people who are looking to snap people right back in it. It's going to be that hamster wheel type of thing. And then, of course, inflation doesn't help. And like Rachel said, the government, that's easy. All you got to do is inflate the price on certain things. I mean, let's be real. They're controlling the market. It's just more of, if you're in a position to be able to afford it. Because I guarantee you right now, taxes on something is one way now. 2 years, 3 years later on down the road, be something totally different. You got people and buildings and infrastructure to keep up. So, yeah,
You guys remember when we're all at an age, you guys remember when you can walk on a car lot and not qualify to get a car, a brand new car. Now it's at the point where, and I have a friend who told me that he has about a 500 credit score and was able to walk on the lot and get a brand new car. But of course, what was the interest rate? I asked him what was the interest rate. He had a 34% interest rate over 7 years. You see what Kelsey is saying? So the point is it's not that it's not anymore like, come on guys, be responsible. Like, we're not going to sell you this car. It's more of like, oh, I'm gonna sell anybody this car.
Yeah.
Hey,
in worst case scenario, they'll repo it and they done already got your stuff. They done got some money. So either way, they come out on top.
$30,000 for a $10,000 car. Like,
Right.
you know what I'm saying? So it's like it's ridiculous. So that's why I said that mindset, because of the mindset we have in America, I don't think that we would ever adopt it, because think of that lending company and how much money they made off my friend buying that car and that interest rate for that amount of time, and he didn't even know. And he told me, he was like, I don't know why I'm still paying on this car. You know, I've been paying on this car for 5 years. And
that's paying interest. That's all you paying.
This interest.
You paying interest. You ain't paid a damn bit of that principal.
If we don't know, how can we do that?
Paperwork or what? Oh my God.
But honestly, like you said, we're that's the mindset. We contribute to it, because most people, the ones who are diligent, would have really looked at that situation. And to me, it also comes with knowledge and wanting to know. But I think a big part of it too is that if we change our mindset, then you'll have more people contributing towards being out of debt and stopping contributing towards it. But you're still going to have those people who want that flashy, or who want to be able to get something that they can't have right now. And that's part of that patience. That's part of knowing, because real talk, if he knew he was going to be paying that, look, stick with what you got. Enjoy not having a car note. Just focus on the maintenance. Use that money for something else, because guess what's going to happen? If you are eventually, some way, shape, fashion, form, going to get another car, at least have a good loan. At least have a good loan to where you're not paying high interest rate, and you see yourself getting up out of it in the next, before 7 years. And if you can't find, you that's just price of doing business. But also be informed about your options, be informed about what they do, because you don't want to find yourself in a trap. And it's interesting how many pitfalls are out there, and it's so enticing. You know, it doesn't take much. You know, you see something, you want it, or you're in a bad situation, you need to hurry up and get out. They're going to take advantage because you don't have the best credit score, or what, screw it, we'll get you in a loan, we got you. Interest rate's still going to be pretty high, because that's just the market. You can go into another one and find the same thing. It doesn't really matter. It just, what's the interest rate, the basic interest rate they're going to hit you with. And if you could find other ways to pay it in cash in order to avoid all that stuff, do so. If not, you're going to pay the price and contribute to the system. But the goal, even if you do, is to get out. Get out. It's like the Matrix. You can swallow that green pill and get up out, and then you're not contributing towards it, and you and yours will be good. It just continues on that. Car, I saw your hand.
I want to add to, because I have been that person who have fell into those traps and have gotten a vehicle, and it's still, if you break it down to the basics, it was a want, but it was also, I felt like it was a need, because it got me to be able to drop Nathan off at his babysitter and pick him up quicker from work than I would if I had to take the bus and the train. And especially here in Atlanta, if you need to have a vehicle, well, if you feel like you need to have a vehicle, let me put it that way, because you can still work it if you enjoy, like you said, enjoy not having a car payment. And the craziest thing is, I got a car and then I moved into the city, like, thank you, God, bye. I'm able to work 20 minutes regardless, because I am in the city now, as opposed to being on the outskirts of the city. But you get the car, sometimes, okay, you fall into it. I agree with the education of it. You get the loan, know that know your credit score, know your credit history. You know you're going to have a high interest. If you're going to get the car, get the car, pay it, refinance it to a lower interest rate. You know what I'm saying? If you're going to go that route, okay, and pay more than what you have to pay towards the car. Pay more each month. If your payment is $150 a month, pay $200. And tell the loan company to put that 50 towards the principal, because that 150 is all interest the first few couple of years, depending on how long your loan is. Okay, I mentioned in my which is a good segue into loans, about how to do loans if you're going to do a loan or use credit. You don't get a loan that you can't pay back. Look at the interest rate. Look at what you'll be able to pay each month. Educate yourself on the type of loan that you have and the percentage that you're going to be paying and how you can pay it off quicker. The sooner you pay, especially when you're talking about a car.
Or anything. I would say anything. Because you don't want no type of debt, whether it be mortgage, whether it be credit cards, those things. Honestly, yeah. And honestly, if you do have a credit card, make sure it's just for emergency purposes. You don't want to touch it. You don't have to, unless you got a strategic purpose. You're doing this because of this, because of that. You know what I mean? Some people have rewards cards. I have one. Sometimes I'll put things on there just so I can build some rewards so I can use it later on. But I know I'm paying it off, and I know there's a process. So no, I get it. If you're going to do something, do it very strategically.
Right. You should be paying it off every month unless you have an emergency, like your car breakdown and you need to get a new something on the car, and it was more than you would have to pay. You would rather be just pay that off, especially if it's an interest rate, than to not be able to drive your vehicle. That's an emergency, or it's emergency, I had to use the money. But when using your credit card, you should never be maxing it out. Never maxing it out. And you should only be using it for here and there and paying it off every month before the statement comes out. If you're going to do it. Like, I have credit cards because I do want to get a house loan, a mortgage, because I want to buy a whole single family home eventually. And I just don't see $1 million coming my way so I can buy the house. You know what I'm saying? I mean, if there's another alternative where I would not have to go and get a mortgage, yes. And even then, when I go get my mortgage, I want to put down a large down payment so I'm not paying a lot of money monthly. Because that's the key too with loans, is if you're going to get a loan, or if you're going to get like an auto loan or a mortgage, what you put down, that makes you more of an owner. Because a lot of people don't understand. They buy a car, they say, look at my car. No, that's you and whatever bank you got that loan from car. You only own a one thousandth of that car. You know what I'm saying? Of that car. And the more you pay off the principal, the closer you are to owning that car out, or that vehicle out completely. Same with the mortgage. So the more you put down, the more you own of that vehicle, and the less your monthly payments will be, and what you will owe back.
I would say this though too. Be careful with the credit card as an emergency card. Because I'll tell you my personal experience with that. I had years ago, I had a credit card. I never had more than $100 on that card. For years, I moved into a house, and then we know with a house comes stuff, right? And I didn't have money in my savings. So one thing after another, when I tell y'all I blanked, and my card was up to like 10,000.
Mm-hmm.
And I paid Citibank so much money. So that was one of our last debts we paid off. And when I tell you, I called them, I was out and I closed it, obviously, because obviously I told you where my stance is on it now. But I couldn't when I tell you, next, my husband, I was so happy we made our last payment, because when you think about the amount of money I paid them carrying over that balance every billing cycle, carrying over $10,000 every billing cycle, and I'm able to put, maybe I can only afford to put so much. So, that's why I say, just from my experience, if you don't have any money in your savings, having that emergency credit card can get slippery now. Especially, like I said, if you have a lot going on in your life, or if you have home, because a lot of people don't know, when you own a home, a lot of stuff comes with that mortgage. So you pay the mortgage, and you gotta buy it when the water heater go out. You gotta buy it when the air go out. Yep. So so just be careful with that. That's my personal testimony.
Don't make it.
I blinked and it was up to 10,000. So
that's the joys. That's the double-edged sword of being a homeowner. If you don't know somebody, or you don't know the hook, man, that stuff falls right in your lap. And then it'd be something very, very expensive, a roof or various different appliances. But I would say it this way. One of the things I totally agree with Rachill 100%. You got to be very careful. But one of the things I also was going to contribute is there are a lot of resources when it comes down to buying mortgages, especially if you're a first-time homeowner or a home buyer. So there's always resources out there. Credit cards and cars, I don't think as much, but always do your research. See if there's always free money out there. As much as possible that you don't have to use out of your own pocket. But I know it's more with mortgages and homes than it is with other regular and recurring debt like cars and credit cards. But once you own a home, everything falls into your lap, and you definitely want to make sure that what you buy, you are at least aware of the potential costs when it comes down to, maintenance. And I would always encourage anybody. I learned this myself, kind of personal testimony. If you have appliances, get that covered, get that insured, because if that goes out, hot water heater, furnace, I had to pay $5,000 abruptly because the furnace went out. But if I had insurance on it, then appliance insurance on it, then I'll just pay the small deductible, and then the rest of it they carry. But everyone's preference may be different. I just say that is something that I believe is very beneficial when it comes down to the maintenance of a home and appliances that you don't have the money ready and available for. Plus, always have a nice little spare cash account emergency fund. Money that you don't touch, that you just let sit in case for any emergencies. So you don't have to run to credit cards or any other place, a personal loan spot or whatever. If you can develop that and be disciplined, then yes, you can come to that in emergencies, and Lord willing, you're only touching it in emergencies. But set those funds accounts up. Those are always going to be very beneficial when it comes down to when you make major purchases like a home or just to have for a rainy day. I think the discipline of not spending your money and money management is very critical. You have to be disciplined when you're doing those things so that if that thing happens, you are prepared for it. It's just most people sometimes don't do it, or are not willing or disciplined enough to do it. And also decisions that you make can also have those indirect decisions. If you buy a car quick, fast, and never really think about certain things, not just the loan, but then come to find out it has problems, maintenance problems, that's where your emergency stuff come in. You're swiping credit cards, you're doing all this stuff to maintain a car, and you're in a bad loan. Those trickle down effects of bad decisions, they are very critical. That's usually the cycle. That's what gets you in. A bad decision from one thing can then have a indirect impact, if not major direct impact financially on other stuff that you're trying to do. And in that trickle down effect, before you know it, you find yourself just hot credit cards, bad credit score, filing bankruptcy, going a whole bunch of other stuff. But I would all say this too, with the caveat, everything is a lesson to learn. You would hope that the stuff that you learn throughout life will help save somebody else, or at least, if anything, makes better decisions as you move forward in life. And I believe mom and dad were a good example of that, which you definitely try to apply throughout life as we navigated and the stuff that we go through. But worst case scenario, you can tell somebody, try to avoid them of the pitfalls as much as possible, and hopefully they have the ear to listen. I'm hoping people who see this will understand, hey, look, let me start looking at some things. Let me start checking, dotting I's and crossing T's. Because you would hate to look up and be like, oh my gosh, I didn't know they was charging me this much. or you look up one day and it's like, dang, this is not good. Or honestly, what we all hope for is that you're in need of a car or you're in need of something. You know you're going to get a loan, but you're going to be paying more attention about the numbers in that contract. And you have a plan about how you plan to get out. Even if you may do the whole loan, at least this is your budget. This is how you're going to do this, and this is how you're going to take care of maintenance, and this is how you're going to attack either your credit score or other credit debt so that you can move forward and have a good plan, financial plan moving forward. Be aware. It's just, navigating the best way you can despite the pitfalls that you may run into, if not that you're already in.
Lisa, did you look like you had a question?
I did actually. It was more of a I don't know. I guess it's more of a common sense kind of thing. Like, okay, I know how we were talking about, people want flashy things and stuff like that. I remember back in the day when I lived in Alabama, seeing someone drive a Navigator and, you happen to not tail them home, but you happen to be in the same area. Come to find out they're living in the projects with a Navigator. My thing is, shouldn't you be more financially responsible? For example, okay, you two, if I'm not mistaken, both of you have families, correct? So you may need a 4 or 5 bedroom house. Whereas my husband and I'm gonna be 50, so I'm not having any kids no time soon. I'm gonna be 50 in about a year and a half. I've never seen my husband and I in more than like a 3-bedroom, 2-bath house, because all of our kids live out of state. And if they do come visit, chances are they're not all coming at once, but even if they do, I think 3 bedrooms, 2 baths is more than enough. I mean, considering they're not going to be living with us permanently, you know what I'm saying? So is there a reason why? Because if I'm not mistaken, land technically does not depreciate. So it doesn't, I mean, you don't want to live in the worst neighborhood, but at the same time, I don't need $1 million 3-bedroom, 2-bath house. Is there a reason why I would buy a $400,000 house compared to a house that's remotely the same but in a different location and it's only $200,000?
I would say, and this is going from my opinion, personal opinion. So, but I don't want to have to get more than what I need. If not, it's going to cost way more in maintenance. Because personally, what I realized, and it didn't dawn on me until probably maybe like a couple of years ago, but I remember when I had a green Nissan Sentra. It's my first car, compact, held me down, paid it off. And I remember around that time frame, there were a lot of SUVs hitting the market. I mean, man, the SUVs was coming around, the Explorer, you had the Lincoln Navigators, you had all this stuff, you know what I mean? And man, I wanted it. I mean, I could see me in it. I was tired of sitting down in my vehicle. All of a sudden, my green vehicle that was paid off, compact, was getting on my nerves because of what I wanted. I eventually got me a Lincoln Aviator. To me, I kind of consider that definitely in the SUV crew. But what I also realized later on is that it also came with a bigger price tag, not just with purchase. Purchase was pretty decent. Got it for maybe like 20,000 used, had low miles, but the maintenance. So the gas in that vehicle, I used to be able to put in my compact maybe like $30, fill up the tank wholeheartedly. In this truck, $40. That was unleaded, fill it up. Not only that, but then when I travel somewhere, the amount of gas I use versus the compact and the SUV, totally different. I could easily do a couple of runs here and there and be at a half a tank and then have to put in another $20. But not only that, but what really got my attention was when I needed tires. Last time when I got tires in my compact car, that sucker was maybe under $1,000. With this truck, it was over $1,000. I'm looking at like $1,500. And you know how with tires do, they don't sell it to you one by one. They sell it to you typically in a set. It's beneficial to get tires in a set than it is to get one by one. But not only that, there was some maintenance work that needed to be done. Fortunately enough, I had a little bit of the coverage under warranty, but when I looked at the maintenance, if it would cost me if I didn't have it, that was easy, like almost $2,000. So, and kind of touching back on what Rachel was talking about when she was, trying to repair the house, when you own that home, you're now that person that's going to take care of the maintenance. So if your roof goes, hot water heater goes, whatever the deal is, and keep in mind, if you got a bigger house, the hot water typically you would pay on a smaller house is going to be different. The AC unit, most of the times with the bigger house, with the 5 bedrooms, you don't got just one, you got 2. So you got to really look at the maintenance cost that comes with that, because it's nice. I would love the 5 bedroom, but just imagine, don't get me wrong, cleaning the house. I mean, every day, who's going to be really cleaning these houses? I mean, these rooms, you know what I mean? Is it going to be you? That's cool. That's fine. If you like to do that, great. But then you add that into other financial costs. And is it worth it? For some people, it is. If you got the money for it, do it. Matter of fact, I would say pay it off and then get the 5 and do what you do. But for me, I would hate to have, if I have a house like that, I want it to be a home. Those rooms are filled. Like, they ain't cleaning themselves. There's somebody who's staying in that room and they gonna clean it, or it has a specific purpose, even if it's a storage. My biggest thing is that, is it worth it? And for me, I want to have what is going to be comfortable for my family, and that I can maintain without having to break the bank, not having to go into an emergency fund or tap into my credit cards. If you got it, do it. I just remember that lesson when I thought about it. I was like, man, I dealt with it, but it kind of also put me a little bit behind the 8 ball with certain things, because when something unexpected happened and I had to pay for it, I had to pay for it out of pocket. And you got to be prepared to pay for that out of pocket if you don't have no other warranties with the house, or with whatever's going wrong. If you don't have insured on it or anything, you're paying it out of pocket. Can you afford it, especially if it's unexpected? If you can, do so. I hope it makes you happy. For me, I want something that's definitely going to fit us. So I know we will definitely be looking for a single family home, but do I want a 4 or 5 bedroom? I'm not sure. I really want to look at a variety of things. Location of highways, schools, hospitals. Location is key to me. But, I think the biggest thing is finding what you want and it fits your budget and it brings you joy. And that's usually it's a fine line, and it's a balance. It's sometimes being able to picture what you want, but then is that what you really want? Can you afford it, maintain it? And if so, hope it brings you happiness and joy. You don't want to bite off more than what you can chew. Sorry, my bad. Go ahead.
We're coming along to about an hour now of recording. We might have to do another episode later on in the month, next time you two are available, to talk more about money and our relationship and what we need to do, because there's a few more things that I wanted to get to, but I don't want to go over time. Is there anything that you want to add, Lisa?
No.
Okay, well, I would love to continue on, but we want to keep it under an hour, so we're gonna wrap it up. Thank you all for listening to Listen to Your Aunties. Excuse my allergic reaction here. You will not see that next time. Thank you, Kelsey, and thank you, Rachill, for joining our show and being a guest and giving so much wisdom on money that you've out of your experience. Kelsey, you are a Primerica. You work with Primerica on the side. Did you want to give any information on how to contact you in your area? Anyone that's interested in getting what you have to offer?
Got you. I will say it this way. I'm more than welcome to talk with anybody. I think the biggest thing is just figuring out what people's goals are and what they want financially, and then help them achieve them. If there's anyone that is interested, hey, let them contact you, and then you all can relay the message to me, and then we can start from there. I think the biggest thing is just being able to continue to give wisdom to people who are willing to listen. And hopefully it helps people as much as possible from our testimonies, our personal experience, stuff that they've learned. And definitely want to, do it again if we can. I think more people who hear the message, hopefully it makes them think. If they makes them think, then hopefully it makes them act. So I thank you all for providing the platform. Everybody,
Thanks for
see you
having
next
me.
weekend.
Thank you. And
Yeah.
Rachill, you're a T-Mobile manager. You might need to come to your store and buy some phones.
Rachel, like, look, man.
Don't send problems my way now.
Yeah, man.
Yeah.
Make sure you got good credits. Let me stop. Oh man.
So I'm in Virginia. So if you're in the Maryland, DC, Virginia area, yeah, for sure, have them shoot me their information, and we can talk about some numbers, some phones, get you set up. Just let me know.
If you don't know, my cohort in this whole thing, Lisa, is an author. And we're currently doing, I'm currently doing a book review, Take All of Me, on Friday. I try to do Friday nights, but sometimes it has to go Saturday. Buy her book. It's available on Amazon. She has some more other books that she have available on Amazon. They're very interesting. And remember to like, share, and subscribe to our page. Tell a friend, share, listen to your auntie. Bye.
All right now.
All right.
Have a good
Thanks.
one.
Have a good one, everyone.